The brutal truth, 5 trading mistakes that cost me everything, and how I'm fixing them. Alright everyone, welcome back to the channel. Today, we're getting real. I mean, real. I've been on this trading journey for a while now, and let me tell you, it's been a roller coaster of highs and some pretty spectacular lows. I recently failed a funded challenge and it stung badly. But instead of just wallowing in it, I decided to dissect every single misstep, every bad decision, and figure out what went wrong, because if I don't learn from this, what's the point, right? I owe it to myself, and honestly, I owe it to you guys who are following along, to be transparent about the struggles, not just the wins. So, what I've done is identify the absolute critical errors that led to that failure. These aren't just minor slip-ups, these are the big ones, the account killers. And the good news? Each one has a solution, a concrete plan of action that I'm implementing right now. Here are the top 5 mistakes I made that blew my funded challenge, and exactly how I'm going to fix them to finally become a consistently profitable trader. This isn't just about passing a challenge, it's about building a sustainable skill, a real business. I know a lot of you out there are grinding, trying to make this trading thing work. Maybe you've hit similar walls, or you're just starting out and want to avoid the landmines. Trust me, understanding these pitfalls can save you a ton of money, time, and heartache. If you're serious about trading or you've failed a challenge before, this video might save you from repeating the same painful cycle. Let's dive into the mistakes and the solutions. It's going to be a raw one, but hopefully incredibly valuable. Mistake number 1, the siren song of constant action overtrading. Okay, let's kick things off with what was, without a doubt, my biggest nemesis: overtrading. It's almost like an addiction, this feeling that if you're not in a trade, you're missing out on some huge opportunity. I'd be staring at the charts, and even the smallest flicker of a potential setup would be enough for me to jump in. It wasn't about a high probability entry, it was about the to be doing something, the itch to be active in the market. I was basically trying to force trades, convincing myself that a B- setup was an A+, just so I could click the buy or sell button. This constant need for action completely overshadowed any rational thought about my actual trading edge. What I conveniently chose to forget time and time again is that patience is a strategy in itself. Sitting on your hands, observing and waiting for the market to present a truly A+ setup is not inactivity, it's a calculated position. Some of the most profitable trades I've ever taken, especially in my backtesting and even in previous successful periods, were the result of extreme patience. I'm talking about waiting for hours, sometimes even days, for all the stars to align perfectly according to my refined trading plan. It's about quality over quantity, a lesson that cost me dearly this last time around. The market doesn't care about my desire for action, it only rewards disciplined execution. So, the fix here is pretty straightforward, but it requires serious discipline. I am committing right now to only taking A+ setups. This means I will inevitably be taking fewer trades, maybe just a handful per week, or even less if the conditions aren't perfect. Each potential trade will be scrutinized against a strict checklist derived from my core strategy. No more almost there setups, no more gut-feeling entries unless they are backed by solid confluences. Every single trade has to earn its right to risk my capital. This shift is fundamental, moving from a gambler's mindset chasing action to an investor's mindset, patiently waiting for high-probability opportunities. It's about preserving capital until the market truly offers a gift. Mistake number 2. The emotional whirlwind revenge trading. Alright, mistake number 2, and this one is a real gut punch because it's so emotionally driven revenge trading. Man, this one has cost me more than just money, it's cost me peace of mind. You know the feeling. You take a loss, maybe it was a fair loss, maybe it was a stupid mistake, but regardless, it stings. And then, that little voice in your head starts whispering, you gotta make it back, right now. Get back in there and show the market who's boss. So what did I do? I jumped straight back into another trade, often a much riskier one without any real analysis, fueled purely by the desire to erase that red from my P&L. The crazy part is, when I'm in that revenge trading mode, my strategy goes out the window. Risk management? What's that? I'm not thinking about stop losses, position sizing, or even the market structure. It's all raw emotion, a desperate attempt to undo the immediate past. But here's the cold, hard truth that I've had to learn over and over again. The market doesn't care about your feelings, and revenge trading almost never works. In fact, it usually digs a much deeper hole. That one emotionally charged decision can completely obliterate weeks, sometimes even months, of disciplined trading and careful progress. It's like a wrecking ball to your account and your confidence. So the solution here is about building an emotional circuit breaker. From now on, when I take a loss, I am done for at least a short period. I will physically step away from the charts. I'll close the platform, go for a walk, grab a coffee, anything to break that immediate emotional feedback loop. I'm also implementing a strict 2 strikes and you're out rule for the day. If I take 2 consecutive losses or even 2 losses that breach a certain percentage of my daily allowable drawdown, I am shutting down trading operations for the rest of the day. No ifs, ands, or buts. I'll use that time to journal the trades, analyze what went wrong, if anything, and ensure I come back the next session calm, collected, and objective. This isn't about admitting defeat. It's about exercising control and preserving capital for when I'm in the right state of mind. This next mistake is particularly frustrating because it's entirely self-inflicted, ignoring my own damn rules. I've spent countless hours, days, weeks, probably months if I'm being honest, developing and backtesting my trading strategy. I know what works for my personality, my risk tolerance, and the market conditions I prefer to trade in. I have a plan, a literal roadmap to navigate the charts, and yet, when the pressure mounted, or when I got a bit complacent after a few wins, I'd start to deviate. It's like having a detailed IKEA instruction manual and deciding halfway through, nah, I think I know better, only to end up with a wobbly bookshelf. I'd start cutting corners. Maybe I wouldn't wait for that crucial third confirmation. Or I'd see a setup that was perfect, but was trading against the higher time frame trend, and I'd take it anyway, telling myself, this time it's different. Sometimes it was just a gut feeling, which, let's be clear, is often just impatience or greed in disguise. And almost every single time I veered off the path of my established rules, I paid for it. The market has a funny way of punishing indiscipline, swiftly and often brutally. My strategy is only as effective as my ability to follow it consistently, without exception. To combat this, I'm going full-on systematic. My trading plan isn't just a guideline anymore, it's becoming law. I've created a physical, laminated checklist that sits right next to my monitor. Before I even think about entering an order, I have to go down that list and tick off every single criterion. Is the market structure aligned on multiple timeframes? Is there a valid entry signal according to my system? Is the risk-to-reward ratio acceptable? Is my position size correct? If even one box remains unchecked, the trade is a no-go. Period. No more negotiations, no more bending the rules. This isn't about restricting myself. It's about protecting myself from my own worst impulses and ensuring that every trade taken is one that truly fits my edge. Mistake number 4 is a bit more insidious because it can creep in slowly, giving up too soon. After a string of losses, which is inevitable in trading, or even just one particularly bad trading day where nothing seems to go right, it's so easy to fall into a negative mindset. I'd start to question everything, my strategy, my abilities, whether I was even cut out for trading. That little voice of doubt would get louder and louder saying, what's the point? Maybe this isn't for you, just quit. And that attitude, that mental checkout, would often turn what could have been minor setbacks or learning opportunities into complete derailments of my progress. The truth is, trading is a journey filled with peaks and valleys. It's not a linear path to success, it's a marathon, not a sprint. Every successful trader I know has faced periods of drawdown and doubt. The difference is that they didn't let those moments define them or cause them to throw in the towel. They understood that resilience and adaptability are key. I had to have a serious conversation with myself. Did I only want to be a trader when things were easy and the wins were rolling in? Or was I committed to pushing through the tough times, learning from the losses, and actually leveling up my skills even when it felt incredibly hard? So, the antidote to this is building stronger mental fortitude and better professional habits. I'm scheduling mandatory weekly and monthly review sessions, not just of my trades but of my mindset and adherence to my plan. Daily journaling is non-negotiable, capturing not just the trade details but my emotional state and decision-making process. If I hit a rough patch, instead of mentally quitting, I'm committing to stepping back, taking a break if needed, but then diving deep into the data, analyzing what's happening, and looking for areas to adjust or improve. It's not about achieving perfection on day one. It's about consistent effort, consistent learning, and the unwavering belief that I can overcome challenges by staying in the game and adapting. And finally, we arrive at mistake number 5, which in many ways is the root cause of all the others, not treating trading like a real job, like a serious business. For too long, I approached it with a hobbyist mindset. Sometimes I'd be super focused, other times I'd be easily distracted. There was no consistent routine, no clearly defined work hours, no real sense of accountability as if I were reporting to a boss, even though that boss should have been me. And surprise, surprise, when you treat something like a hobby, you tend to get hobby-level results, which in trading often means inconsistent profits or worse, consistent losses. Think about it. If you were starting any other business, say a coffee shop or a software company, you wouldn't just wing it. You'd have a business plan, set operating hours, track your expenses and revenue meticulously, analyze your performance, and constantly look for ways to optimize. Why should trading be any different, especially when significant capital is on the line? The allure of freedom in trading can be a double-edged sword if it leads to a lack of structure and discipline. I realized that if I truly wanted to achieve full-time income and long-term success from trading, I had to start acting like a full-time professional. This has been a profound mindset shift for me. I'm now clocking in and clocking out at set times, dedicated to market analysis, execution, and review. I have daily, weekly, and monthly goals not just for profit but for process adherence and skill development. I'm meticulously tracking every trade, every metric, as if I'm preparing a report for a board of directors. I'm holding myself accountable for every decision, good or bad. This structure isn't about making trading feel like a grind. It's about instilling the discipline and professionalism required to succeed at the highest level. And honestly, this shift is already making a huge difference in how I approach the charts. I feel more focused, more patient, and far more in control of my trading operations. So, there you have it. The 5 critical mistakes that led to my downfall in the last funded challenge. It's not easy to lay all that out, but if my experience can help even one of you avoid these traps, then it's worth it. The key takeaway for me has been that failure isn't final, it's feedback. And I've taken that feedback to heart, creating a concrete plan to address each and every one of these weaknesses. It's about evolving, learning, and coming back stronger and smarter. And speaking of coming back stronger, I'm excited and, admittedly, a little nervous to announce that I've purchased a brand new funded challenge with the 5% ER's prop firm. But this time, I'm walking into it like a business owner, not a gambler. Every trade is calculated, every dollar is respected. My rules are set in stone, my mindset is fortified, and my commitment to treating this like the serious profession it is absolute. This isn't just another attempt, it's the application of every lesson learned, and I want you with me on this journey. I'll be posting my daily trades, thoughts, wins and losses. Let's build this together. Let's stay accountable to each other. Your engagement, your insights, they genuinely help. If you've got tips, experience, or just words of encouragement, drop them in the comments. Your input could be the difference maker, not just for me, but for everyone watching. Let's get funded, let's become real traders. And this time, let's do it right. Don't forget to like, subscribe, and hit that notification bell so you don't miss an update. Let's go.